Hello everyone, welcome. This is today we're gonna have our second session for gaps for trading the gaps, and more precisely today we're gonna see a lot of examples. Basically, we're gonna go through some strategies on how to use gaps to your analysis, either if it's a trend analysis or any other system that you might using and you might consider adjusting it when you identify a gap. So as usual, I would really appreciate the feedback regarding the audio, and I need to go through the disclaimer warning as usual until I have a feedback from you guys. So this material is provided as general market communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find our risk disclosure in our website along with any other legal documentation that you might want to see. So we are good to go. As usual, a quick reminder regarding how you can contact us, obviously via social media, but also you can send us an email at webinars@hfm.com. So anything you need, we are here to help. And just a reminder that this webinar has been recorded, so you're going to receive an email with the recording within the week. Okay, we are good to go. Very briefly, because we have covered the basics of gaps and gap trading in the last session last week. I'm going to go through briefly reminding what is a gap trading and how does it work. Sorry. So, firstly, gaps, by saying gaps, we are referring to the gap that is being created when we have a significant price move. So there is basically the visual representation of the shifts that we are seeing in supply and demand dynamics. So there is an imbalance between buyers and sellers that lead to abrupt price movements, and this creates this gap between two sessions. So, sorry for that. So gaps is something that we might see in every single market. So regardless if it's a forex market, energy market, stock market, is something that occurs regularly in all markets. Basically, the understanding and analysis of a gap, it could actually help the market participants either spotting a trend, spotting a reversal, as we said last week, an exhaustion of the trend, and in general it gives some important information to the trader and to the market participants in general. So I'm gonna skip a bit the intro since we have covered everything last week. Also, when we are saying gap trading, we are referring to the strategy, okay, that capitalize, let's say, on price gaps, which are identified on the price chart of a particular asset. Sorry. So usually traders, once they identify a gap, they try to analyze it through technical analysis, by categorize also the gap, whether it's a common gap, a breakaway gap, an exhaustion gap. There are different types as we covered last week. Let me see whether I have included it. Actually, I have included it in this presentation, in today's presentation as well. So by through technical analysis and by initially categorize what type of gap we are facing, then depending on the gap type, the majority of the traders could decide and could amend their trading approach based on what type of a price gap we have. So this may involve taking a position on a filling of the gap, or for just confirming whether there is a new trend, confirming whether we have an indication of a reversal of a trend, and in general trying to take advantage of this information, of this signal. Also, have in mind, guys, that gap, in general, the gap trading, it could also play. It also involves basically risk management. So risk management, timing, and volume analysis play a crucial role in gap trading as well, like any other market strategy. Okay, before we present this strategy, let me just stick to here. Okay. So like any other strategies, in general, having a strategy and not like if you don't have a plan, then as we say, we have covered in the past, and as we try to, as we keep saying in every webinar, having a plan helps you get discipline, have having a risk management, and in general be well prepared for any loss that might for any kind of outcome, let's say, of your trading, of your position, of any position taken. So like any other market strategies, gap trading involves risk and also it may result to capital losses. That's why you need to combine it with technical analysis to have a well-defined trading approach in order to proceed with a gap strategy and to implement a gap strategy. So let me see, I have some questions, isn't it? I think I'm in the wrong class. I was hoping to join the webinar for beginners. Kindly direct me to a link for beginners. Okay. Fortunately, Sekomocho left before I managed to see his question. Okay, I'm gonna reply later on. Now, let me just. How many of you guys watched last week's session with the basics of gap analysis? Just to understand whether I should repeat some basic stuff or not, or whether I could just go straight to the strategies and to the examples actually that present strategies. Okay, Rodero. Okay, I did. So, okay, I see. Okay, so let me share a different. Let me share a different PowerPoint just for the beginning, just to remind everyone the different types of gaps that we have. So, okay, this is also by going through the different types of gaps, we could also see some gap strategies for each type of a gap. So we have the breakaway gap, first of all, okay? The breakaway gap, sorry, which is typically one of the most significant ones actually, because it signals the start of a new trend. So it's a gap that we usually spot after a period of ranging market of consolidation. And it will indicate the shift of the momentum, the shift of the market sentiment. So it will signal a potential trend. Okay, it's just a signal. We need confirmation in order to consider entering the market either to the upside or to the downside. But it's a sign that there is a shift, a strong shift in market sentiment, and it will take place after consolidation or general range bound trading. This is what the breakaway gap is. Okay. Another type of a gap is the runaway. Okay. The runaway gap basically could be seen within, could be found inside strong trends. So basically, it signals the continuation of the trend. So if you heard our trading sessions, live analysis, we mentioned that there is a correction in this asset before another attempt to the upside, or there is a rebound before another attempt to the downside because the overall trend is downwards, etc. So this type of corrections, pullbacks, pauses, these indicate the continuation of the existing trend. So this is something similar with the runaway gap. So a gap that can be seen inside strong trends and will confirm the continuation of that particular trend. You can also they are also known as measuring gaps. Okay, so how this can be how you can what actually how you can take advantage of this knowledge. Let's say basically, if you have missed a trend, or if you want to to your existing trend, these are confirmations either to add on your existing position or to jump into the market, because there is further steam to that particular trend, either to the upside or to the downside, depending on what kind of direction that particular trend has. Also, exhaustion gap. Basically, there is another important, actually, these are the most significant gap types. Okay, there are others as well, but these are the major ones: exhaustion, runaway, and breakaway gap. The exhaustion gap, and I think its name is, it is clear what it is and what it presents. Basically, you're gonna see it, you're gonna spot it at the end of a trend. Okay, so pretty much signals the possibility of a reversal. So these gaps will indicate that the trend is losing momentum, the sentiment is changing, and if of course it's combined with a momentum indicator, and your momentum indicator also signals change in the momentum, then this is a confirmation that the current trend might run out of steam, and we might be at the end of the trend, and that could indicate the possibility in the near future to have a reversal of the trend. So the market participants usually could interpret this type of a gap as a sign either to exit their existing position, or as a sign to deploy a new position uh, on a potential reversal. Okay, so we have also the island reversal gap. Basically, again, it's a combination of exhaustion gap and breakout gap, as you can see over here. So again, at the end of an extended trend, stating that we might see a reversal of the trend. However, the fact that we had an exhaustion gap followed by breakout gap could basically confirms the new trend, the beginning of the new trend. Okay, so, and in my, sorry for that, I forgot to mention that something like that, okay, I mean, breakaway gap, exhaustion gap followed by breakaway gap is something that will need time to it's something that could last for days. I mean, we are at the end of the trend, so there might be a lot of consolidation before seeing actually a breakaway gap that could confirm the beginning of a new trend. I don't think we have covered this type of a gap in the previous session. So it's called opening gap. So basically, it's a type that you might find when the price opens outside the previous daily bar range. Breakaways are a type of an opening gap. Okay, basically, we are referring to opening gaps when the price fails to retrace and fill the gap. You know that market always repeats itself, always fill the gaps. But if it fails, then is when we say that we have an opening gap or a partial retracement, not filling completely the gap. This is actually something that is known as outside gap. And a full retracement and failure to regain the opening range highs is something that signals failed breakaway and a return to the previous trend direction. We're gonna see examples, so don't worry about it. So anything you need, please stick it on the question box and I will reply verbally. Okay, so I would like, let's see. Let me check whether I will go straight to the. Okay, actually, let's move on to the takeaways. Another important type of a gap presenting obviously the imbalance between buyers and sellers. So, but the only thing that you need to have in mind is the ones that we already covered: breakaway, runaway, exhaustion, and the opening gap. These are the most important. Have in mind that gaps act as a magnets, so market tends to try to fill that gap, okay? And it's something that you can see, you can find in all markets. It's something that is common in equity markets, okay? Especially in the corporate stocks. So let me share. So for example, let me just, as you can see, this is an Apple chart, gap up, gap down, gap down, gap up. That reminds you something? An inside island. Can you see that? Gapped up, topped, stay for 2 days above this gap, and then a breakaway gap that was the beginning of a downtrend. So it's the gaps in general are very, very common. You can find it, you can spot it in all markets. Okay, don't. Hopefully, I will not confuse you with this, but it's something that you find often into the stock market or into soft commodities such as cotton, copper, something that we're seeing quite often, if I'm not mistaken, in coffee. But yeah, just something to have in mind. But mainly in the here, Amazon as well, in 1 hour chart, gap up. It hasn't filled this gap yet, so we're waiting for uh, for some kind of a signal regarding filling this gap or extending higher. So let's move back to our slideshow. Okay, and we're gonna start with some examples. Basically, we're gonna start by presenting how initially you can use the gap analysis to your trend analysis. Okay, so so far so good. We okay so far? Okay. Okay. First of all, guys, trend gap. So is when we're gonna see some strategies on based on some existing, basically when you have an existing trend, a current trend, and you spot gaps that could be in the same direction or a different direction, and what that means and how you confirm the confirm whether the trend will continue in the same direction or whether we have an indication of a reversal. the Let me just get back. The runaway gap, okay, and the trend gap, I mean, they're the same thing. Pretty much, as I said earlier, they should be on the same direction of the current trend and will signal the continuation of the trend. Now, a reversal gap is usually in the opposite direction of the current trend, and it could be close to the end of a trend, to an extent. When we have an extended trend, then we might see a reversal gap occurring that could signal that we might see a correction or a reversal of the overall trend. Now, okay, here's an example. Okay, an example with a lot of analysis, a lot of a lot of gaps. So we're gonna take it step by step, okay? So as you can see, the asset was in a ranging bound trading, was consolidating, and the very first gap was found to the downside following a consolidation, right? So this is known as, do you know? Do you remember what I said earlier? No? So this is a breakaway gap. Remember that the breakaway gap is the gap that occurs after a period of consolidation or range-bound trading and indicates a strong shift in market sentiment. And indeed, this is what happened. As you can see, we had the breakaway gap downwards. Let me zoom in a bit so you can see it. A pretty strong bearish candle, which was another indication that we might be in the very beginning of a downtrend. However, confirmation came later with the next few sessions, in which the asset continued to present lower lows, right? So the next basically confirmation came over here with this candle over here. So 1, 2, 3, 4 sessions afterwards, when the asset extended lower, breaking this immediate support that was seen in the last previous 4 sessions, and confirmed that there is a new trend, a new downtrend, and the momentum has shifted. It's now negative, basically. Okay, run a breakaway gap with a direction downwards, and the creation of this new trend, downtrend. As you can see, can someone tell me what's this? What's over here? When we again we had another gap over here. So can someone name the first gap over here? This is the one that I have emphasized, this one. I'm not sure whether you can see my cursor. Let me just try again. Cursor, pen. Okay, can someone tell me what type of gap is this one, and what kind of gap is this one? Okay, Rotero replied. Yes, well done, well done. They are both runaway gaps because we are already in a downtrend, and they just confirm the continuation of the existing trend. So they gap down, they're runaway gaps, and indicated basically that the trend has not run out of steam, and there is a renewed basically bearish momentum. The momentum was a bit steady with a period of consolidation, but the further, oops, no sound. No, that shouldn't be possible. Barak. No, let me reply to Barak. Just a second, guys. There is, please check. Yeah, as I was saying, there was a bit of a consolidation, could be seen as a correction due to oversold conditions, but sellers are back in play, and this just confirmed that there won't be any reversal, but the selling pressures have been renewed, and the downwards trend will continue. Very well done. Well done. So Once you see something like that, guys, you might consider either jumping in if you have not an existing position, either considering opening a short position because as you can see, combine it always with some price action analysis, or basically by using your existing system. So either if you were a price action trader, okay, either by checking, by reviewing the candles, you can see that after these runaway gaps, either the first one or and the second one as well, you can see that consecutive bearish candles followed. So this was a clear indication that sellers are in control. So if you had a position open already, you could just add to it, or you could consider joining this trend until you have a sign of exhaustion. So some consolidation was seen at this point over here. However, the breakout of this immediate support is something that also is adding to the adding further confirmation that this trend is very, very strong and will last longer. You can see that we had a lot of runaway gaps in this particular example until here we are, until a bottom at actually below 15 level. Sorry for that. Just it bottom at below 15 level, $15 level, but over here there wasn't any exhaustion gap, there wasn't any type of a gap that could signal reversal. But that's fine because you had. Can you spot this formation? 3 candles formation. This looks like a morning star formation. Bearish, doji, bullish. So that was a sign that the sentiment is changing and there is an increasing bullish bias. And indeed, we have seen that the next session there was another bullish candle quite strong that corrected. That actually, oh, I'm sorry for that. Let's get back. Trying to zoom. Here we, okay, perfect. Yeah, the asset rebounded, consolidated for a while before we spot this. Just before we spot a triangle at this territory over here. So you need to combine your gap analysis with either with other technical tools or strategies that you might have already in place. Either if you have spotted, you might have spotted a pattern, you might have spotted changing the momentum, combine in order to confirm these signals. So over here we had a triangle. So the asset was actually moved after this rebound, moved within the triangle until it managed to break it. Okay, to break it, to move above it after actually another gap created at the bottom of the triangle. But the move above it, okay, what had initially signal the beginning of a swing higher. So as you can see, extended higher, broken the previous resistance. We had some runaway gaps that basically confirmed this short-lived rally to the upside. So signal bullish signal, provided a bullish signals here, here, another one here, until we had the so-called island reversal gap, which is a reversal gap. I'm referring to this one over here, in which we had exhaustion and a breakaway followed. Okay, so that's an island reversal. It signals the end of this rally and indicated the possibility of a correction. Okay, so, but even if you didn't notice all this, you didn't notice the descending, the triangle, you didn't notice the gaps, you need to just try and monitor and explain what your candles are presenting to you, right? Bullish candles, higher than the previous highs, lower than the previous lows, full body candles, small body candles, weak candles. So all these are things that will help you identifying whether we have demand or supply, where we have bullish or bearish pressure. Over here we have an outside gap, okay. Actually, an outside gap, which let me just bring back the, where is it? Just to remind you a bit that, okay. Come on. Okay. Remind you a bit what the outside gap is. Basically, it's a gap which occurs when the price opens outside the previous daily bar range. So what we mean by that, let me just try to, I think Apple had something similar earlier. Yeah, so when the gap was the gap was created, when the gap was created, okay, this type of a gap is an outside gap. Basically, is when the new session, in the new session, recording stopped. Why recording was stopped? Let me check something. Okay. So as I was saying, an outside gap, I don't want you to be confused. And a runaway gap could be also an outside gap. What you need to remember about the outside gap is just is the fact that it could occur outside the previous session. But what matters the most, to be honest, is whether it's a breakaway gap or a runaway gap, in order to identify whether it will present a retracement or a continuation, and etc., etc. So over here, let's get back to that slide. Okay, here we are. Over here, we have an outside gap. I know that is not so clear, okay? We have an outside gap that basically that was basically seen above these latest two swings. So this is another gap over here, another gap over here. So basically, the very first one, this outside gap over here, basically it presented the possibility of the continuation of this long-term trend, the bullish trend. And in the near term, the reversal of this latest swing low. I know this is confusion, okay? Bear with me, keep an eye. Overall, we have been to the upside. Regarding all these ups and downs, we have seen higher lows, right? So overall, it has been to the upside. In the near term now, we had a swing up and a swing down. So this gap, this very, very first gap over here, basically signals the possibility of another rally. It just signals, it's no confirmation, it's nothing. It's just, it signals that this swing low, this down leg is running out of steam. And the fact that it was followed by a bullish strong candle gave the indication that we might have a trend to the upside. And this is not only it. Have you seen this formation over here? Strong bearish candles, doji in the mid, and a bullish one which closed above the mid of the first candle. So it could be, it is also, it could be seen as a morning star formation as well. But nonetheless, even if it's not a morning star formation, the fact that we have seen this failure to extend lower in combination with the outside gap, and in combination and considering the strong bullish candle that followed, indicated that there is a strong change in the sentiment. So what we need confirmation. Indeed, confirmation came the next session with another candle, another higher high, and another gap higher. Okay, breaking this previous resistance level. Can you see this? This is acting as immediate resistance level. This and this over here, actually 1, 2, 3. This is an area that was retested, that was retested several times. It was a key resistance area that broken over here, and the asset moved further higher. Further confirmation, or actually, if you have taken a position already in this, by seeing all this, you could add to it with this gap over here. Huge gap that happened due to earnings release report. Huge gap that broke not only this swing over here, but also this swing over here. So this is again a gap, an outside gap, more precisely exhaustion one, that happened due to earnings release report, and suggested that the trend will have another strong swing higher. Okay, how you can consider, how you can time your positions now, or when you can consider exited positions at every single consolidation or doji candle, or basically that you might see, along with the combination of momentum or RSI or MACD indicator that suggests that is the asset, the trend is running out of steam. So at the top over here, we had a doji candle. It's not visible, but remember this one over here. Can you see that? After an extended trend, you have doji candle or consolidation, you might consider either partially closing your position or adding adding a stop loss, shifting your stop loss actually closer, in order if it shifts, if it change like here, it will be stopped out, locking some profits for you. So for example, after this gap up, bullish, the next session it was doji. I know that I hid it with my cursor, sorry for that, but we had a doji candle. By seeing this daily performance, the performance actually consolidating and leading to a daily doji candle, you could have either shifted your stop loss higher in order to lock some profits, or you might consider closing your position. By closing your position, there is no need for regression, by the way. If that trend continue higher, it's fine. You can still participate in the trend as long as it gives an indication that indeed it will continue for longer. Let's move on to the next example. I think we covered it, at least the first one. This is what I was talking about. If in an extended trend, you have a candle that is either doji or a long leg, a small body candle, basically, that signals that there is something is changing. There is a lot of, so for this one, for precisely, that indicated that there was a lot of selling pressure, and the bulls managed to close the price nearly unchanged, to close the price very, very close to its open price. So that was an indication of a very, very significant selling pressure. So that raised a lot of question marks. But the next session was bearish. Okay, so exhaustion gap, breakaway gap, another gap lower with another bearish candle. So that was a reversal point. Okay. Even if you missed all this, or you weren't sure whether you should join this kind of reversal, over here we have a triangle again, right? A pennant, basically consolidated a bit within this triangle until it gapped down with a runaway gap, bearish candle, another bearish candle. So that was another entry point, right? You can consider exiting that trade after you saw these consolidations over here for 4 sessions in a row, followed by this gap up. So that could be an exit point, right? Bullish, gap up above the previous swing. So that's a possible entry point, even though it's short-lived with this bearish big body candle at the top. And it is what it is, right? Just have the odds on your side, follow the trend. Here, gap down, bearish, another bearish candle after the gap. Okay, another one, a runaway, just possible entries or possible levels at which you can add to your existing trade. Is this clear so far? Use your trend lines, right? Use your trend lines. Connect your highs, connect your lows in combination with the gaps, with potential gaps. You can spot breakouts. Look at that. That was by connecting the highs. We had a trend line pointing lower. Okay. At the bottom, we had consolidation for 3 days in a row, followed by a gap higher outside above the trend line, indicating that the trend might change. There is a confirmation over here, obviously. This is not a strong indication that there is a new trend to the upside. Okay, but the fact that the asset extended above the trend line with a gap over here is something that initially signal that there might be a new trend developing to the upside. So some consolidation followed. So you need, at this point over here, you had to monitor the asset to identify any swings higher, possibly a pending order as well on the breakout of this latest swing over here. So far so good, guys? Anyone? Anyone, just to confirm whether you can still hear me and you're okay? All fine. Okay. Another example, another trend analysis example with combining gaps as well. So many examples, right? We have outside gap in this example. We have inside gaps. We have inside gap reversals. We have exhaustion. We have, yeah, this actually inside outside. Inside outside and exhaustion. Yes, this is the one. And island reversal gap, basically, because it's a gap up and a breakaway, which is so-called island reversal gap. So remember, outside gap acts like runaway gap, confirming a trend, especially if it's being followed with. So in this case, we have an uptrend. So it also is between bullish candles. So that all strengthens even more the signal of a continuation of this uptrend. Inside gap over here, higher, until we had also basically another continuation of a trend indication. Swing high. So the swing high was broken after an outside gap that confirmed our trend. So outside gap followed by a breakout of the latest swing high provides you entry points. Okay, I know that okay, the gap is just an indication. When you're gonna when you're gonna open a position, or how to time your position, or when to exit your position, are things that you that in order to identify, you need to combine either breakout of the last swing highs or swing lows, breakout of support and resistance levels, etc., etc. So in this example over here, the outside gap indeed confirmed our trend, the continuation of our trend, but in order to enter the position, the breakout of the swing high could have been a nice entry point, either by placing pending orders or doing it on spot. Okay, over here, the failure to extend higher, which led to another swing high. Okay, and the massive bearish candle that broken this upwards trend line, it was the confirmation for a correction, a sharp correction. And this is, by the way, this is a daily chart, but if we had zoomed into a 4-hour gap, we could 4-hour time frame, we could be able to see this inside gap reversal occurred over here that confirmed basically the correction, the reversal. Yeah. So let me just check for questions. Okay, basically, okay, the inside gap, okay. Let me find some better examples for you to see, and in order to, okay, well, I have it over here. Do I? That is a comparison between. Okay, let's start with the inside gaps. Can you see that, dear Rodero? Basically, the inside, okay, an inside gap is created when the price opens between the prior session's high and low. So, in a weak market, a gap was created, an inside gap was created when the price open, here is the open price, right? Open between the previous sessions high and low, so within the body of the previous session. Okay, so this is what we called inside gap, when the gap was created when price opens inside of the previous day's highs and lows. It's something that, okay, let's assume that this is a daily chart, right? Over here is not so, I mean, it's not straightforward, but if you zoom into the 4 hour or 1 hour, you will be actually able to see that there was a gap, and that's why the price opened inside the previous day's session, the day's performance. Now, the outside, let's get back. I have a demonstration with the outside, if I'm not mistaken. Here we are. Don't have an do I have an example? Okay, an outside gap. Let me let me just zoom in. Okay. Yeah. Ah, sorry for that. Here, and let's zoom. It's not so visible, but I think that's the best one. Okay, can you see that the candle, the first candle, closed here? A pen, a laser. Okay. So just a second. Okay, now. Okay, this is a outside gap. Basically, an outside gap is created when the price opens above or below, basically beyond the previous session's high and low, like the example over here. So over here, the price closed around that level. Okay. The next day, we could see that the candle, the session, opened way higher, higher than the previous high, not only higher than the close price, but higher than in general, the last session's performance, higher than the previous day's highs. Okay, this is an outside gap in an uptrend. If we have an outside gap in a downtrend, that means that the price opened below the previous session's low. That's the difference, okay? And these are usually gaps that, so the outside one, the outside gap is a gap that is not, in general, these gaps generally do not fill on the same day, while the inside gaps are actually gaps that could be filled quickly, even in the same day. The difference, the key difference, other than the ones that I have already mentioned, is that the inside gap can be used mainly by intraday traders or for a quick intraday trades. Okay, provides so it gives basically an indication in a possible trade intraday. If we consider that they did occur at a strong support and demand zone, so it's an intraday. You can use it for intraday trades. The outside one, though, it's not necessarily. It's not usually used for intraday trades. It could be, but the key about the outside gaps is just they give this reassurance and this confirmation that either a new trend is established or we have the continuation of the existing one, like in the example over here. Okay, like in the example over here, the outside basically confirm the continuation of the uptrend, of the existing uptrend. Inside over here, okay, didn't really confirm the continuation because it followed by a very, very weak candle. However, by spotting something like that, you can move down to intraday time frames, 1 hour, 4 hour, sometimes 30 minutes, depends on which time frame you spotted this inside gap, and consider taking an intraday trade. Yeah, we are already an hour live, but I think we covered everything. Let me just, because the next are just examples. Remember, latest swing highs, swing lows, and their breakout more precisely, because remember that swing highs or swing lows provide some immediate support and resistance levels, right? Resistance. So the breakout of a resistance, resistance that broken over here, signaling another attempt to the upside, or latest swing low if you are in a downtrend. All these provide immediate key resistance or support levels that will just confirm the direction, but also could provide potential entry points. Okay, like this one, swing high. It was all-time highs as well. Was broken, followed actually after an outside gap was created. Bullish candle, outside gap, breakout of a swing. So that was an indication that we can go long. Exhaustion, consolidation, strong bearish candle, breakout downwards, suggested that this is a possible reversal zone, which indeed confirmed with the next candle over here, with the next candle over here, that confirm the new downtrend. Side gap, outside gap. And that's pretty much it, guys. I think we have covered all the examples. I think we covered everything. So let's summarize a bit what we have seen so far today, and also in the previous session. We went through what gaps are, what is gap trading, how you can trade the gaps. We have spotted how you can recognize the type of a gap, how you can combine it with a trend. So analyzing, using the gaps, analyzing also the market's trend. Also, don't forget that technical indicators in this type of it could be easily combined and well combined with gap trading strategies, because they confirm what the gap is signaling. So don't hesitate to use technical indicators to confirm the trade signal. Don't forget that swing highs, swing lows, they provide some key support and resistance levels in which you can use as potential entry or exit points. An exhaustion gap could be your it could be useful for exit point. With this way, you can be able to time your entry as well. So yeah, I think all these examples that we went through today are very, very helpful for understanding the gaps and how you can adjust them into your existing trading plan and trading strategy. One important trading tip is to remember that once the price begins to fill the initial piece of the gap, it usually finishes the job and fills the full gap. Okay. So when trading with this technique, you might aim for pre-gap price levels. And that's pretty much it, guys. We reached to the end of our session. Hopefully all these strategies that we went through today and these examples help you understand gaps initially, gap strategies, all these different gap strategies that we went through based on our examples, using our examples, and also that the gap trading actually is quite useful for exploiting the price gaps in the financial markets. So yeah, that's pretty much it for today. If there are no further questions, I'm going to call it a date. Well done, Tilly. Yes, always try a demo account first. Anything that you want to test, anything that is that you're not really familiar with, always try in a demo account in order to make sure that you understand it and you have comprehended well and you feel confident enough to use it in a live account. So guys, thank you very, very much. Have a great day ahead. And we will see you again tomorrow. We have another session with Michalis. And we're going to have also a live analysis on Thursday in our social media. Thank you very much. Have a great day ahead and see you again tomorrow. Bye-bye.